Hello everybody, my name is Nick Groves, your host here at Trading Analytics, and today we have a little bit of a weekly recap of what happened last week. What a week it was, and you can see here in the S&P that we actually had a minus 3% move last week. Things got quite interesting, and you can even tell from the futures we went a little bit further south than just that. That was due to some of the news out of Iran and Israel. We dipped down overnight Thursday into Friday, and you can see that we didn't quite get back there again. You can see on the cash, this is where we were at. So we did actually regress back down to the 50% retracement or so at 49.73. I was surprised to see us close down at these levels, and closing on your bum isn't the best thing because typically you can open that way. But I just want to point out that I think we're getting to some really key levels. Like I mentioned, that 50% retracement right here at 49.75, that could hold us. And I think from a longer view, if we can't hold that, I think it's likely that we do actually come down to this 48.21 level. I think that's going to be really important. That was a breakout level in January, and I think that would actually put us close to flat on the year, which would be quite interesting. But there's that there, and then I also noticed, Friday, although we had a down day, you can see 0.88% down. That wasn't the case entirely across the board. If you look at the S&P equal weighted, you can see that we've actually been holding this 618 of the 2024 range, and it looks as if it may want to consolidate here. It could potentially pop back up, and you're seeing that also in the Dow as well. The Dow has not been as weak as the others on Friday. You can see we had this nice candle right here on Friday. It came down to the 38.2, actually from the 2023 lows or so, right near that 38.2, and you can see that also acted as former support back in January. We tagged it perfectly, and now I'm viewing the Dow here in this larger channel. Now this is the overnight futures. Now we just opened up. It's brushing its head up against it, but this trend line's held us really since the highs. So it'll be interesting to see if we can get back above there. If we do, I think it's likely that we do come back up towards this 38,500 level. That's going to be the first level of resistance. Just looking left, I believe that will be the level to watch this week to see if we can get back above it. Now, on top of this futures chart, I just want to point out the Dow spot contract. This is from the 2024 range. You can see that we touched down near the 786. So the Dow is not up all that much on the year, actually. Just taking a little broad guess here, roughly 1.58%, which is quite low. So you really want to see buyers step in this market in the event we're going to get a move back towards highs. Now, I'm not entirely sure if that's going to happen, but it's just food for thought. We really need to see bulls step in around these levels, or else I think we're going to see a much larger correction. Just to show what kind of correction we have had, it's about 4 and some change on the Dow. Well, actually, entirely, it's over 5%, down 5.6%, 5.7. So that is something to note. And I was also taking a look at XLF. Now, XLF, the financial sector, it came down and perfectly tagged this 50% retracement of the 2024 range, and it looks like it wants to bid up higher. That was another one. Really what we saw on Friday was a sell-off in tech, which I'm going to get into. But I also want to point out XLE. XLE came back to this 23.6 fib from the lows in January, and it's also holding this breakout still that we saw. This breakout, these were levels we hadn't seen since 2014, I believe it was, and we're still holding above there. So this looks like it could continue higher as well. And I also noticed in XLY that it's not looking too hot, the Consumer Discretionary fund, and it's broken the lows from January. It's actually on its lowest, closed on the lowest level of the year, below this 38.2. This one's actually looking pretty bearish to me. I could see it coming down to 166.60 or so, but really it needs to get back above 175 before it can kind of ease off some of that downward pressure. And from these pressures, we've seen the dollar really take one heck of a footing this year. The dollar index has been quite relentless. Now, that being said, I've been waiting for these levels to get hit for some time. Really what I've been looking at is this 161% extension that comes in Oh, I'm sorry. It's actually this extension right here. From here to here. I was looking at this extension up here. We came pretty darn close. And now I'm looking to see if we can get an A, B, C to D correction down to 105. That would be the 23.6 from the lows in March to the highs. But ideally, where I'd like to get long the dollar again is around 105. I'd like to see us pull back to this breakout and also the 38.2 of this range. I think that the dollar could ease off because I also feel as if yields are close to easing off. You know, we've seen one heck of a run in the 10-year. It's came up to this channel resistance up at 467, and I think it's due for a little bit of a pullback. And, you know, I'm also noticing that in TLT, you know, the inverse of that contract. I am viewing TLT right now in a bit of an inverted head and shoulders pattern. Now, this pattern will take some time to play out. It's actually not calling for a bit of a breakout until September, which is ironic because I think that's around the same time that we could see the Fed actually cut rates. But, you know, just looking back, looking left, we're at very low levels in TLT, you know, really at levels not seen since 2011. I know we saw them last year in October. But, you know, historically, these are some levels that might offer a good opportunity to actually get long bonds. But for now, like a little bit more zoomed in, we did close above support at 89. I'd like to see a daily close above 90 to really press, and then resistance above there is going to be 93. Now, the alternative scenario is that we're actually going to come back down somewhere near these lows from October of 2023. But first line of support is going to be 86, and then below there, things can get really dangerous if we actually get back near this 80 level. So we'll just have to pay attention to that. And yeah, but like I mentioned, although we're seeing that pop in the Dow, the equal weighted S&P, you know, what really drove this market lower was tech and really the semiconductors, which I'm going to dive into here in a minute. But I just want to point out from a daily perspective that we did come near this 618 of the 2024 range. If you're looking at it from a longer time frame, you know, if we're going to continue lower in tech, I think it's likely that we do come down to the 16,990 level or so, kind of swipe the lows at 17K. But it's really important to note what kind of critical levels we've came to in big tech. You know, I'm going to show you guys my Mag 7 chart, and we came right up to trendline support on Friday. I would not be surprised to see us get an actual bounce from here. You know, the 38.2 comes in at 23.20 or so. We need to get back above there. But I think it's important because tech has really ran this market. And although we've been falling and it feels like we could really crack, this is still a bull market. And the 38.2 is the continuation fib. I know we're below it at the moment, but you'll see it in some other areas of the market where we're just pulling back. And I would like to also point out to you guys some of the big, you know, Mag 7 stocks themselves. Facebook, it actually came down to that 480 level that we've been talking about with you guys after, you know, back testing resistance. I think that support's going to come in around 460, that 38.2. Now, in the event we get below 460, I think it gets really dangerous because there's this giant gap from February that's about I think it's a 10% drop. So that could be violent and quick. And it's also important to remember, guys, that we have earnings this week. So don't forget, we have Meta after the close on Wednesday, but you can see Tesla. I know Tesla's implied volatility is somewhere around 10% on that news, or on that earnings. So just be careful. We have, you know, Alphabet, Microsoft, like I said, Meta, IBM, Tesla, a lot of these big stocks. So just be careful with trading them this upcoming week. Just stay nimble, right? But above here, 505 is going to be resistance now, and I'm going to walk into Google now. Google hasn't really budged much despite the rest of the market moving, you know, relatively down. And I think it's holding quite well. It's holding this breakout that it had in April. So for now, solid bull trend. Support's going to be at 145 and resistance is back above all-time highs, but first stop would be 160. Microsoft, we've been paying close attention to this. It finally broke this rising wedge. It backtested resistance or former support, now resistance at 419, and now it's at the 50% retracement, and I think of the 2024 range. You can also note that this held us in support pretty much from January, February, and March. So this is an important level. I would not be surprised to see Microsoft bounce from here. But below there, I'm probably going to be looking at this breakout around 384 from back earlier in the year, which also coincides with a 38.2 from the lows that we saw in 2023. Moving on to Apple. Now, Apple is a stock that it's been performing terribly in my opinion, but I'd rather short bad companies than short a company like Apple. I think it's really difficult to get short around here. Now, sure, we did trigger the neckline. Technically, this double top is in place, and you could see Apple actually fall all the way down towards 140. Do I think that's going to happen? I'm not sure. But I just don't. I think it's really hard. The short Apple trade is a hard trade. You do have the 50% retracement coming in at 161, not too far from here. So just be careful, but if you're going to buy it, I would let it try to fall a bit more, at least get back above 168. And, it did just last week reject the 38.2% retracement at the time. You can see it came right up to here. I'm sorry, this is drawn from here. Tagged the 38.2 and rejected, so that's also pretty bearish. So I would be careful with Apple for sure if you're trying to get long. But for now, it's in a bear trend and should continue south. Amazon is on really key support for me. This rising channel has held pretty much since 2022 through 2023, and now 2024 it acted as support after the breakout, and it's now sitting right on it. So I think that that's significant. Also, you can tell that this 50-day moving average is right around here. You tend to see support around the 50-day EMA, especially in a small bull trend like this, strong bull trend like this. So just don't be surprised if you see Amazon actually get a little bit of a lift. You can also see there's some horizontal support here that held all of February or mid-February and March. So I think that this is a really solid level for Amazon, and we're going to have to see if bulls can defend it. But above here, I would say around 180 is going to be resistance, and below there, you can see that there's this gap here at 162 that I could see us falling to. Now, Tesla is an interesting one. Tesla's been super bearish this year. I think it's down over 40%, but it is coming into this falling wedge support. Now, falling wedge is actually a bullish reversal pattern. So if in the event that we can get a footing down here, it might actually catch some wind. We do have earnings on Tesla this week. Like I mentioned, the volatility is projected at plus or minus 10%. But also do note that we did fill this gap down here in Tesla. So that's finally something that's checked off the list that I've been waiting for quite some time. Resistance in Tesla at the moment is going to be at 168. And above there will be 205. We're going to have to see how Tesla plays out this week. Now, moving on to the big topic of conversation from this past week is NVIDIA. NVIDIA fell down 10%, and you can note that semiconductors in general have come down quite a bit. This is the SOX index. They've just been falling. Also in the, let's see here, the SMH semiconductor ETF, it's also fallen, but you can note it's at the 38.2% retracement from the lows in 2023 to the highs, which is significant. I mean, semiconductors have really been driving this market. So for NVIDIA, it's also come down to its 38.2. I know it's down 10%, but I think that this is a solid level. But what you really want to see is it back above 800, and more importantly, this breakdown from 836. It's seen quite the selling. But this is a very strong stock. I mean, no matter where it puts a low in, even if it's somewhere around here, it's still going to be considered, higher lows. So it's important to watch NVIDIA around here. You can see that we had this breakout in February. So this level is going to be extremely important for bulls to hold. In the event that it breaks below there, I think that the next stop is going to be actually 680, which would be a heck of a drop. It would be an additional 8 to 10%. So I just feel as if the market, you're seeing the Dow pop, you're seeing the Russell hold, you're seeing the S&Ps and Nasdaq hitting really important levels, the Mag 7 composites hitting important levels, Amazon important levels, and now the 38.2 in NVIDIA. If you start seeing us get back above here, people are going to be saying that's the low and we're going back to all-time highs. So although it's really tough to get long in these situations, sometimes the tougher trades are the better ones. I'm certainly looking at getting along this equity market, but I think it's also important to note that if we cannot hold these lows, we are looking at a bit of a deeper correction, right? We're going to start looking at bigger fibs, 4,800 in the S&P, and that's an additional 3% or so that we could fall, which could take out a lot of longs. So I think we're right where we need to be in terms of where a dip should be bought. I'm just not entirely sure if we're going to get it. I think it's worth a try, but if not, just note that your risk could accelerate very quickly to the downside. So with that, we're going to have earnings this week, like I mentioned. Please make sure that you check us out because I'm going to be posting quite often on our Twitter, Trading Analytics. And with that, thank you so much, and I'll see you guys soon.